I'm Michael.
I'm Ralph.
Welcome to Munoz and Munoz.
Come check it out. Here at Munoz and Munoz, every case is important to us. Big or small or big, we're here to help you.
And here also, privacy is our #1 priority for all of our clients. So come check it out. Our #1 priority is serving the community. We want to give the best attorney service out there in the industry. We're here to help you. Please call us for any personal injury or criminal defense needs that you may need.
So thank you guys for visiting our firm. As you can see, I'm here, Michael's here, always ready to serve you guys for any questions. And please, do not hesitate to call us for anything you need. It could be the simple question, we're here for you. Y sí, hablamos español.
Shoulders, knees, and toes. Head, shoulders, knees and toes, knees and toes. Head, shoulders, knees and toes, knees and toes. And eyes and cheeks and mouth and nose. Head, shoulders, knees and toes, knees and toes.
Affordable self-care from professional massage therapists and estheticians. It's what we do. Massage Envy, where better begins.
Hey everybody, I hope you guys are enjoying the show with Let's Connect Now. My name is Danielle Wood. I'm with Prospectors Federal Credit Union, a division of Certified Federal. You guys want to contact us regarding any banking needs or even auto loans and personal loans, feel free to contact me at any time. You can reach me at 909-396-9688 or 909-504-7371. I'm looking forward to talking and speaking with you all soon. Have a great one. Bye-bye.
All right, everybody, welcome back to another episode of Let's Connect Now, your business resource. And it's Valerie and myself. Monica wants to be out and eat Chipotle while we're over here conducting business. She couldn't be in here because she was like, I'm hungry. I got to eat.
Eat before business.
She has to eat before business.
There you go.
Last time she forgot her lashes. Now she needs to eat. Man, it's like our child. We have to take care of our child, Val. We got to take care of her. But no, it's amazing that, this is our second show in one day. Sometimes we double up and we do 2 shows. And
I want to go buy a blouse.
And she went to go buy a blouse, didn't tell me, so you guys might see the same type of shirt. She wanted to match me, yes. But I hope they watched the last episode because the last episode was amazing. Betty, amazing story. I mean, my goodness. I mean, just hearing her story from her being an immigrant farm worker to now a city councilwoman in Irvine.
First Latina.
First Latina in Irvine City Council. That's amazing. That's wow. That is a great story. But we're gonna get to another great story, right?
Absolutely.
Because you keep on bringing some great friends.
Well.
Is that a great friend?
This one's a little different.
Wow. That's hilarious. Wilbur, I'm sorry. She paused.
No. This was a little bit different because Wilbur Cabrera with SoCal Loans.
Hey.
Wilbur Cabrera with SoCal Loans.
SoCal Loans. Where's our clap? Yeah. All right. SoCal Loans.
So he's a dear friend of mine. So actually, him and I have known each other. We kept saying 12 years. It's actually been 15 years that we've known each other.
15 years.
So Wilbur and I have grown together. We used to work at Bank of America.
Okay.
And yes, so he's been at it a little bit longer. But yeah, we're now 2 entrepreneurs. So he's been at it for a while now. But one of the things I do want to announce is actually our new partnership.
Ooh, all right.
So yes, I want to continue, as I mentioned, my mission of being able to help business owners grow, scale up, empower them, be able to fund their projects. So as you know, I launched EVIA, which is empowering businesses to fund, innovate, and grow.
Right.
And so just thinking about everything that you can do to grow your business, I mean, this partnership only made sense. But not only that, I've known him for a long time, and I know what he knows what I know that he knows what he's doing.
He knows that I know that he knows.
But no, thank you, Wilbur, for making the time out here today. And yeah, just I'm excited, and I'm just excited because of all the things that we're going to do together as far as being able to help those business owners get the capital. As you know, I come from the banking background, right? And just being able to help the client, no matter if they're investments or an investment property or commercial property, whatever it is, like we're still able to help them, even personal loans. So, but I'll let him get to that a little bit further. But yeah, Wilbur, tell us a little bit about your story, and let's start how you got into the banking industry.
Yeah, you know what? I was always pretty blessed to get tapped in the shoulder. I used to. I remember my first job when I came here from El Salvador. I got here in 1999. I started working at the Open Swap Meet in San Fernando. I would go there on Tuesdays when we get out early from school, and then Saturdays and Sundays we would work there. And then I got tapped in the shoulder to work for Vallarta. So I started working at Vallarta. I was pushing the carts.
Yeah.
Little kid there. I got tapped in the shoulder there from In-N-Out. I started working at In-N-Out. Then Coca-Cola would always stop by, and they hired me too. And then same thing happened when banking. Somebody tapped me on the shoulder. They said, hey, look, you should apply at the bank. So then I applied at Chase and Bank of America. And I got offers from both, but then I ended up working for Bank of America for many years. And it was I see it as like my school, right? That's where I learned everything that I know now. And going through that process, doing loans for small business owners, we also got to see the other side where clients would get declined, right? So it got me thinking, what can I do to help those clients that get declined and send them to different sources? Like Valerie, she had a great job at Bank of America too, helping clients with the community, right? That's something that Bank of America was doing, and some other banks are starting to do that as well, where they have somebody that's like a community officer helping those clients that can't get help through the banks, but they're able to get helped outside as well. So that's where I met my business partner in 2017 when he had started the company, SoCal Loans. He started a lot of doing commercial real estate loans, residential loans. And then when I came fully on board, that's where we brought in my expertise, which was the business side, right? So now we have a full you can say, list of different products that we can do, right? So like Valerie was saying, like personal loans, we can help clients with personal loans, personal credit cards, business credit cards, and of course, any type of business financing from a startup to existing businesses. Like we were talking about nonprofits too, right? We can also do that as well. It's a little harder, but we love to educate the business owners. We're really, really heavy on that, right? If we can't get you the loan now, how can we help you be lendable in a year or 2 years? Right, so that's where that education piece comes in. We bring different experts, either a financial advisor, a CPA, an accountant, right, where the clients might need that, because it is part of the lending process for you to have those people that you really need. So we're pretty heavy on that as well. So we love to work with the community. We're pretty big on that. We go do presentations for different organizations that we work with. And we're very proud of that. We do a very good job through educating people. We also are getting business, right? Every time I get a business owner, I always tell them, hey, look, I'd rather do 10 loans for you, right? Because that means that I'm growing with you, right? So if I'm helping you, I'm able to do a lot more just for one client. And we become very personal with them, right? Even when somebody gets declined, I take that very personal. I'm like, oh my God, how can I get this loan through the process?
Well, can we get more? Right? Oh, come on.
Yeah, so that's really what really pushed me to start business with my business partner. And now we're doing that, and we can have everything, right? From residential to commercial to small business, and also on the personal side. There's sometimes a lot of business owners that can't find the funding when they're a startup, because not that many lenders do that. So then we thought about, okay, how can they actually get that? So now they're able to get that through like a personal loan, right? And those loans are unsecured. Some people can get up to $500,000, and they're unaware that even exists.
Wow.
Right?
Yeah.
So even with credit cards, people are unaware that they can get a credit card that has a $100,000 limit with zero interest. Right?
What?
For like a specific, like usually anywhere between 12 to 18 months, we've seen that with zero interest. Right? And a lot of people take advantage of that. There's a lot of business owners that are waiting to get paid, maybe for their receivables, and they have a credit card with zero interest. You know, you're
right. Yeah,
you're
they're waiting. Yeah, exactly.
Yeah.
I know a couple of businesses that do that. Yeah, because you have to wait.
Yeah.
Now, one of the exciting parts about this is I'm even learning and growing as well. And so one of the things that I asked them, I mean, I've always heard factoring. I've always known about it, but I've never actually kind of knew what that was, nor did I know that eventually I was going to be able to guide a client of like, hey, I know where you can get factoring. So tell us a little bit about what kind of industries that might benefit and how that works.
So factoring pretty much is there's a company that will come in, a lender, right? Let's say you have account receivables, right? You're waiting to get paid for the next 30, 60, 90 days. Let's say you have $1 million in account receivables that you're waiting to get paid. The lender will give you a certain percentage in advance, pretty much, on your receivables. Most of the time, a lot of clients benefit from it because they might not be able to get the traditional lending. So you got to take an alternative route. That's where factoring comes in.
Wow.
They take a percentage of the account receivable, but you're able to get the money, right? If you really need the growth and you're growing very rapidly, that benefit. There's a lot of transportation companies, construction companies, manufacturing companies. Anybody that has really account receivables, that's what it really is for. But there's different routes too. Sometimes before we get there, we like to explore the conventional or maybe SBA route, something else before we get to the factoring. Because sometimes clients don't like to do that because what happens is the lender will open up an account where they both have access, and that's where the money goes into. Or maybe there's a client that doesn't like for somebody else to collect the account receivables on their behalf. They don't want to do that. So that wouldn't be beneficial for that. So we like to really learn what is the goal for the client, and based on what they're telling us, and that's where we go out and do that. So I always tell everybody always asks me, what's your credit criteria? I said, my credit criteria is what the situation of my client is. That's my credit buy box, right? Once I understand what their situation currently is, then we go out to those lenders that we know that are going to be able to give them that loan based on their current situation that they're in. So we like to take that approach. We really like to understand what the situation is of the customer. But that's, in a nutshell, that's kind of like how factoring works. It benefits those people that are really in a tight spot too, or they're just growing very, very fast. They might have another loan, but they need more.
Yeah.
Right.
No, and I was in a situation like that. I used to work for a glue distribution company.
Okay.
In Duarte, and we, like you said, we were growing, but we couldn't get the product in fast enough because we had to pay for it. But we had those invoices, and now that you say that, I know what I was doing with the boss, because he was like, "Hey, fax those over because we need to get a percent." Exactly everything you said, because I didn't understand it then. I was a little younger, so I was like, "What? Wait, what are we doing?" He's like, "No, they're gonna give us the money so that we can pay to get our product, so we can continue. Because if we don't, we're we'll lose the client, But the invoices we showed the invoices, we send the invoices to them, and they would front the money for us so we could get the product, and keep the process going. So I understand what you're doing, that the beauty of it working with us, because it's a brokerage firm, but we're really like a consulting firm as well. That's really what we do, because we walk the client from A through Z. Right, like I was saying earlier, if they need an accountant or CPA, we're kind of like the quarterback, right? I love football, so we like to say football,
that. So
what team though?
I'm a Packers fan, so I know it's weird.
Packers, woo!
Yeah, it's so weird.
Oh wow!
You know what? It's funny because when
you can't sit with us, okay?
Yeah, it's a funny story how actually I became a Packers fan.
You like cheese?
No, it's even funnier than that.
do.
So I love the color. I love the color green. So my uncle was watching the Packers play, and I didn't know English. So, because Spanish is my first language, right, when I came here, and I kept seeing Green Bay, and I asked my uncle, what does that mean? Oh, he's like, that's actually your favorite color. Green means green. And green means better, right? So I'm wearing green too. So, but it was funny. I was watching Brett Favre play, and like he broke his thumb, and I said, all right, I'm a Packers fan. That guy stayed in, and I became a Packers fan forever.
Okay.
Through the lows, through the highs.
Okay.
The lows now.
The lows now.
This is hilarious, because I thought my story about how I became a Packer fan was like almost embarrassing to tell people, but after you, I'm going to go ahead and say my story.
That's funny.
So I'm going to go ahead and say it now. So pretty much I went to South Hills High School here in West Covina.
Oh.
And their colors are green and yellow. And so, I was like, okay. I was like, oh my gosh. I was like, there's a team that's green and yellow. So that's my team.
Oh, wow.
Green Bay
And then
Packers.
cherry on top, I love cheese.
Oh,
Not only cheese man, but like
anything that starts with cheese.
Hey, in Nicaragua, you know, I'm from Nicaragua, so we're bad. Like, we fry our cheese.
Wow,
like,
my
it's
God.
so delicious.
That
I
is
try to stay
delicious.
away from it, but there you go. I said it. I put it up in the air.
Oh,
But anyways, sticking back to business.
Interesting. Very interesting.
Talk to me a little bit about investments, an investment property. So let's just say somebody wants to like purchase a shopping center, or they want to purchase a commercial property, but they're not going to be occupying, meaning they're not moving in their business. What would be a down payment and some of the things that you would look for?
So there's many different things that you can do with an investment property when it comes to financing. Some people can put anywhere between 10 up to 35% down. Really depends on the type of real estate that they're purchasing and what the environment is at that current time. And what I mean by the environment is whatever the financial environment is or how the market is currently, like retail spaces, right? We can see that in downtown LA, you see these humongous office buildings that are empty.
Right.
Right.
Yeah.
But retail space is usually a little bit harder. So a lot of lenders, if we're going to do something retail, let's say a retail strip mall, right? Like a very small shopping center, they're going to look at the occupancy that's currently there. How long are the leases, right? Do they even have leases, right? Is it just a handshake agreement that you're month to month and you don't know what's going to happen?
Yes.
Right. So those things play a big role into the down payment as well, right? When you're doing a loan, the client's credit as well. Are they already an experienced investor? That also plays a lot. So you can go from a traditional investment loan. Usually you're looking at 25% down usually. And it's very simple to see if it's going to be if we're going to be able to do the deal, you can say. Does the property collect enough rents for the monthly payment? That's usually the easiest way to kind of see it. So when people hear like the word cash flow, they're like, I have no idea what that means. And like that's when we come in and we tell them, right? So normally they look at a debt ratio of like 1.25 to 1.4. What that means is for every dollar of debt, they should have an extra 40 cents, for example. That's what that means when they're talking about the debt ratio, right? But that's something that we educate the client also on what that means. Because normally, you know, I used to do that when I was a banker before and I didn't know much. I would tell the client, and I would talk to them like if I was talking to another banker or to an underwriter. So then I started changing my mindset. Wait, Wilbur, the client doesn't know that because they're not a banker.
Right.
Right? Just like when I tell a client, I understand the financial aspect of your business, but I don't know the day-to-day how you make money. I don't understand that. I say that's where I need to learn that, right? And for me, and I want to learn that. I want to know as much as possible. I always say I want to have as much as ammo as I have to be able to provide that to the lender to paint the picture.
No, you
right?
definitely, yeah.
So we really gotta understand that. But that's normally the typical. A lot of business owners don't know also that they can actually own a commercial real estate and also part of it also be an investment part of it. So through the SBA, that's what's great about the SBA program, right? If you're going to occupy 51% of the property, the other 49, you can actually lease it, right? So we also like to, we love helping small business owners, especially our community, right? Like the Latino community.
Yes.
We love doing that, and we love educating the business owners and how they can actually also potentially retire with that business property that they have, right? So a lot of them, what they do is, let's say a business owner buys a property today. In 20 years, maybe they don't have kids and they don't have anybody to pass the business to. What are you going to do? You're going to sell the business.
Right.
Okay, you can sell the business and lease the property to the business, to the new owner, and now you're collecting income from that property.
Right.
Right. So that's one of the ways that we also like to educate business owners. Like, hey, look, you can also retire from this. We have business owners. That's funny that they're actually making more money now, less stress than when they were running their business.
Well, isn't that what McDonald's did, right?
Exactly. Right.
Yeah.
So a lot of people don't understand that McDonald's is a real estate company too.
Exactly.
Right.
Yeah.
They don't just sell fries and burgers.
Yeah.
They actually own. They're one of the biggest real estate holders in the world.
Yeah, because they saw that there wasn't that much money franchising.
Right.
They had to make money somewhere else.
Exactly.
And that's in the real
So
estate.
imagine, right? You lease it out. You lease the property out to the new owners. You sell them all the products too.
Yeah.
You see, it's a perfect thing that McDonald's did.
Yeah. Ray
Right.
Kroc.
Yeah, yeah. Have you guys seen the movie?
Yeah.
The founder or
No, but I'm
founder? I
gonna
think?
have to go watch it.
It's
now.
a really, really good
It's
story.
a great story. He just came
it's
in.
kind of satire too, but it's a.
But you know what? They
it's a
weren't
good
visionary,
story.
and that's
Right.
the problem. He
Right.
came in. Ray Kroc he sold ice cream. So ice cream came in, he heard about a burger place that was just booming in California. Came down here, sat outside, checked it out, went inside, proposed something to the owners. They shut him down, so he took over. Took over.
Yeah.
And made it into what it is today.
Wow.
50 years old, he did it.
Yeah.
Ray Kroc, 50 years old.
McDonald's is a very good business. I mean, they
Yeah.
were in partner with. It's funny we were talking about Chipotle, right? So they were in partnership with that, but I
It's
know
making
they
me
had a
hungry.
fallout. She made me hungry as soon as I saw Chipotle. I'm like, oh my God, I want a barbacoa.
But I have a question too. So is it easier to get a loan depending on what you're asking for? When I mean, like, let's say someone like my good friend Oscar, he owns his company where he's into video production,
Okay.
photography. He has, he does a 360 booth, all these things, that he has to do. But he wants the money to, to basically build what he has now, expand it.
Right. Yeah.
Is it easier to get money for that than there is for somebody saying, hey, I want to buy a building, I want to do
Yeah, no, I completely understand. Like it's in your case, it's more about industry, right?
Okay.
What's the lender's appetite? Does that industry do very well, or is that a risky industry? That's where lenders will say high risk. Okay, then that's perfect too. So with the real estate, it's a lot easier to get real estate because now I'm putting a lien on an asset.
Oh,
Right?
okay.
If I'm giving you $500,000, they call that an airball. That means there's nothing attached to it. So the risk to the lender is very, very high. But it also, industries play a very, very big role. Doctors, manufacturers, right? Those are industries that lenders love.
Yeah, I've heard doctors, they get loans easy.
Yeah,
100%
so there's
financing
exactly.
sometimes, too,
So
yeah.
doctors will get 100% financing plus working capital, right? But also we can do that with the SBA program. There's lenders that are able to do that, but their appetite is a lot bigger than the major lenders, right? So one of the biggest stories we always hear is like, oh, I went to so-and-so bank. I went to one of the big 5 banks and I didn't get approved. They said I don't qualify for an SBA loan. That's where the education piece comes in. Right? It's not that you didn't qualify. You don't qualify for an SBA loan. You don't qualify for a loan through them because lenders have their own guidelines.
Right.
There's the SBA guidelines and then you have the lender's guidelines.
Correct.
So that's where we educate the clients and we tell them like, look, this is how this bank lends. I'm going to take you to a different lender. Their rate might be slightly higher, but we're still going to be able to help you. Right. And we show them, look, this could have been the payment, but unfortunately you don't qualify, maybe due to credit, to cash flow. There's a lot of different factors that go into it. At the end of the day, the lender wants to give you money. That's how they make money. And they said, oh, no, this bank didn't want to lend me money. It's not that they don't want to lend you money.
It's just a risk.
The risk, right? And nobody's going to take the time to sit down with you for 2 hours and explain to you this whole thing that I'm talking about right now on why you didn't qualify for that, right? They're not going to do that. So that's where a client will come to us. They'll pay for our services, but we explain that. Right? We're very high on underwriting the files ourselves, and we send it to specific lenders. I don't like to send a file to 60 different lenders. Imagine doing that for every single client. I would go crazy. My team would go crazy. We would never make money. So we would never get the money for the client too. So we normally underwrite it. We send it to 1 to 3 lenders that we already know they're going to like that file. And if they give me what's called an LOI, a letter of interest, that means that they want to do the deal. Once we normally get an LOI, it's very, very rare when the deal doesn't go through. Normally, something crazy had to come up on the credit or the background report or something had to happen. Or the client didn't disclose something to us that we find out after. Right? So I always tell the clients, look, be upfront with me. Tell me everything so I can paint the picture. Because it's very easy for me to do an explanation from the beginning than to paddle back.
Right.
Right?
Now it's like you're lying.
Exactly. Then the lender's like, Wilbur, you didn't know this? Right? So what's going on?
Yeah.
It just opens a huge can of worms that it's going to be very, very hard for you to get out. But yes, working capital, unsecured, it's a higher risk. So lenders look at that a lot closely.
Interesting.
So that's why lenders use the SBA program, right? Because the SBA guarantees a portion of the loan. So do you take the risk 100% yourself, or do you have the SBA back that loan? Right, and if you meet the criteria, a lot of lenders lend on the guidelines of the SBA, but the big lenders don't. Right, there's lenders that are called on non-deposit SBA lenders, where all they do is just SBA loans and they don't touch anything else. They don't open accounts, they don't do investments, they don't do anything. Bank of America, Chase, the big guys, right? There's a lot more risk. Right, there's investors. Like I'm an investor in Bank of America. I have Bank of America stocks.
I do too.
So it's one of those things where I understand that, right? But to a client that needs money, sometimes they don't, right? So that's where we got to educate the customers so they can really understand what's really going on and how these lenders lend. And that's where like our expertise comes in. Sometimes a loan can't be done through their taxes because maybe they're not profitable. So then we can do a loan using their bank statements, right? I always say the further away you get from what's called a full financial package, and what that means, they're collecting 3 years of tax returns for business, personal. They look at financials. They look at a lot of other things. But the further away you get from that, the more expensive the loan becomes. But if that's the only option you have,
Then
what
that's
can you
the
do,
option. Yeah,
right?
that's the option.
So
Exactly,
we
yeah.
gotta educate the clients and make them understand. Like a perfect example, I had a client. We approved him for $200,000, and he got a loan for $50,000 a week ago, and he didn't share that with me. So we went from an approval of $200,000 to zero, very, very quick, because now the lender's
Wow.
like, "Hey, what's going on? How did you didn't know this?" So then I had to go back and explain to the lender. After I spoke to the client, I had to tell him, "Hey, look, like you literally just killed the deal, but I'm going to try to do." We went back and forth. We got him still 75,000, so he still gets 125. But we went from 200. Now he could have technically gotten 250,000. So now he's at a max at 125.
But they tell you that when they're going to get a loan, they tell you, do not open anything else.
Exactly.
Just
Exactly.
wait.
He was in the process, so he didn't know that this was going to affect him, right? He's like,
What he
Wilbur,
did is he did both to see who was going to hit.
And I thought that too, right? I thought that too. I gave him the benefit of the doubt. He has a very successful chain restaurants that he has a few of them. But I gave him the benefit of the doubt, and he's like, "No, Wilbur, look." He called me. He told me everything. I said, "No, I believe you. It's perfectly fine. Just in the future, just run it by
Gotta
me, and
be,
I will
yeah.
explain to you how we're gonna do that together. Because maybe we could have done both at the same time, right? You know, as long as the lenders know what we're doing, maybe they would have gotten both. But because now there's an issue, there's no trust, right? So sometimes a bank will decline somebody for that, right? They call it like a judgmental decline, or they decline you due to character because you lied.
We're
Right.
slowly talking about 60s of credit.
Exactly, yeah. So that's
A
maybe
what?
we're gonna have a segment on that.
A what? What is it called?
The 60s of credit. So he already touched on capacity. He touched on character. He touched on credit. He touched he
wow.
touched on
60s.
Yeah.
without even like
So that's-
Realizing it,
yeah.
he was just.
So those are things that we had webinars, so we
Webinars
have
and
spoke about that,
workshops.
right? So
Yeah.
Valerie has talked about the 60s of credit because that's how lenders lend, the conventional lenders, exactly what you're talking about, which is what I'm telling you without telling you that there's this thing that is called 60s
exactly. So
of credit
that's what-
that exists. But that's how lenders lend, right? But there's a lot of people don't understand that there's so many different options out there. There's so many different lenders. There's lenders that only like to do equipment loans, right? There's lenders that only like to do like video and anything like with video production. There's
Or on the
lenders for that,
entertainment,
or entertainment
manufacturing.
industry, right? There's a lot of banks that are very, very good at specific niche, right? But the clients don't know that, right? So that's where we come in. I mean, literally, it takes me hours to learn a bank's criteria, what's their appetite, and we have that, right? If you look at my tabs, you're gonna be like, Wilbur, how the heck do you have so many tabs open? There's literally like 300 tabs open, but I know exactly what each tab is. So somebody
Wait,
asked
on
me
your
a question-
desktop right now.
my desktop. Yeah.
Oh my god,
There's literally 300, and everybody always gets mad.
that is crazy.
Yeah. So
300 tabs.
yeah, there's literally like 300 tabs. Somebody asked me a question. I'm like, look, I don't know everything. I just know where to go get it. Right? I know where to get the information from. And now with everything, with technology, technology's been phenomenal.
But also
Right.
structuring, right? Like structuring,
That's-
knowing how to structure. So even myself, you know, doing a startup loan and all of that, I'm like, it was foreign to me because I'm like, how is this so much easier? Like as far as the banks, like I was almost like, how am I approved? Like I was in awe. But more than anything, also there was sections that I was lost. So for example, projections, we really didn't deal with that at the bank.
Exactly.
I learned really quick doing mine, but for a client, it's really hard for you to be able to. So would you be able to help with projections?
Yeah,
as
so
well?
see that's why I say
should've
like
just called you.
our brokerage is kind of a consulting firm,
phone
right? At
call
the same
away.
time, it's funny, like we say we're a brokerage firm for loans, but we actually do a lot more than that. If somebody needs help with projections, I already built this Excel sheet already for 3 years projections with every single breakdown that the client needs. All they're doing is plugging in their numbers, right? Somebody needs to a business plan. We have access to that too. We'll help clients do that. If the business plan becomes very complex, we bring in a partner that's all they do. That's their business. they create business plans for people, right? If the projections get too complex too, then we bring in other partners, so that's what they do, right? I'm not afraid to say it. I don't know. We bring in different partners. Like at the end of the day, my goal is to provide the financing for my customer and get that for them, right? I don't care if I have to call another broker, right? Sometimes a lot of people are afraid to go ask another broker for help. If I know that there's a specific broker that's really good at something specifically and they're better than I am, no problem. I will reach out to them. I'm going to make less money, but that's perfectly fine because at the end of the day,
You have a happy
we
customer.
accomplish what we were trying to do, right? It's a customer. And when I was telling you guys, like it becomes very personal to me because I ask the clients, how many employees do you have, right? And when I'm thinking about it, like, oh my God, I can't get this loan. Then I start thinking about the employees. Oh my God, this client's going to go out of business. What about their employees? I started like going down a rabbit hole that I'm like, I'm going crazy by myself, just trying to, because I become very personal with my customers. I really want to get to know them and I want to grow with them, right? That's our biggest thing and that's our passion. I always tell Val, like I can sometimes on a Saturday, I'm like 14 hours in just looking at numbers, but I love doing that. Right, but somebody else are gonna go crazy because they don't like doing that.
Yeah, I'm like right now. Wow.
But that's my passion. I love looking at numbers. But to Valerie's point, a lot of lenders don't do startup loans. The risk is very, very high. They do startup loans for doctors, right? Like how we were talking about.
Right.
But there's other lenders that do offer startup loans, right? But you have to have a business plan. You have to have projections, right? How do you make the bank comfortable, right? I have a company that doesn't exist, right? And you're asking them for $500,000 or $100,000 even, right? How do you make that bank comfortable? Sometimes there's collateral, right? When we were talking about an air bowl, that's no collateral. When there's collateral, okay, now you're making the bank feel a little bit more comfortable, right? Maybe you own a house that they can put a lien on. I personally never saw in the 15 years that I worked for Bank of America, I never saw them foreclose on anybody, that they put a lien on a business. You know, that the business guaranteed, the property guaranteed the business loan. I personally never saw that. Banks are not in the business of foreclosing on people. They want to make sure that.
Now, I know we're coming to an end, but there was something that I really wanted to touch on just because baby boomers, right?
Right.
So that's coming up, or already going on. But then also a way to also increase revenue. So increase revenue almost immediately after you take over another company. Can we talk a little bit about acquisition? So, for example, I just had somebody give me a call and said, I have a bookkeeping business and I want to buy another bookkeeping business. So they're immediately, once they take over that, they're going to raise their revenue and raise their sales immediately because they're taking over another. So talk to me a little bit about that.
So that a lot of people don't understand that there's a lot of programs for that, right? Like, and then I go back to the SBA because I really do think the SBA is the best thing that has happened to small business owners. So the SBA has a program called an SBA 7A. And we do an acquisition program, right? The SBA 7A can be used for many, many different things, but we would just say it's an SBA 7A to acquire a business. If it doesn't involve real estate, it's a 10-year loan. Compared to traditional lending, is only 5 years normally, for the most part. There's exceptions to that depending on the industry, depending on the size of the business, and there's specialty lenders too out there that can get very creative on their terms. But SBA will be a 10-year term, right? You normally want to have some type of experience in that industry, but it doesn't mean that even if you don't have experience that you can't buy it. You could, but something that's very specific to like a book accounting business, probably have to be an accountant, right? Or a bookkeeper yourself to be able to acquire that. So that's one of the things. We go back to how do you make the lender feel comfortable? If you have no experience, you're not making the lender feel comfortable. But there is, like let's say you own one type of business. Let's say you own a restaurant and you want to buy a manufacturing company, right? You could be able to buy it still because you have business experience. That will help you. You don't have direct experience, but you know how to manage a business, right? Now we go back into like, okay, who are these key employees, right? Are these people staying? Are they leaving? You're gonna make the bank feel comfortable with that too. Can you bring in a partner, right?
Yeah,
But we're seeing a lot of business acquisitions right now. There's a lot of great businesses that are making very, very good money. I'm always looking at, even I like to say there's a lot of businesses that are non-attractive businesses, right? Like a laundromat, right?
Oh, yeah.
And it makes very, very good income. That laundromats are very, cleaners are very good too. Car washes are very good. They're not attractive businesses, right? At the end of the day, what do we want, right? We want money to be able to support our families, right? it doesn't matter what type of business it is. Right?
as
If
you're
at the
bringing
end of the
revenue.
day, the results, you're taking care of your family, your
right.
loved ones, you're taking care of them, that's the end result. Right? It doesn't matter the type of business, but that's how like a business acquisition would work. They're going to look at your resume. They're going to look at your business plan, right? Projections.
The
What
companies
are,
and the company's tax returns.
exactly. We're
Yeah.
going to look at everything from the seller, and we're also going to look at everything from the buyer. If the buyer owns companies, we want to see those too. We're going to open the books to everything on the seller side, and on with the only thing that we don't look at on the seller side is their personal tax returns, because they're not the ones getting the loan, right? We get the personal tax returns from the person that's acquiring
Correct,
the
yeah.
business. It's a longer process. It's pretty tedious too. That's where sometimes we offer the personal loans, because the client doesn't want to go through that whole process, especially if they're buying a business that's $200,000 or $100,000. They don't want to go through the whole process of an SBA loan. It's a lot more, but it's better to do an SBA loan. That's just my opinion. But sometimes clients just want it to be quick, fast, no problem.
Yeah.
At the end of the day, we're doing whatever it is that they want. But it's also my job to guide them the best way that I can and what's more convenient for them also. But also to save them, right? There's times where lenders will tell us, like, Wilbur, can you get me more? I can. But I don't recommend you to do that, because I'm looking at your finances. Am I going to put you in a worse situation than what you're in, or am I going to help you? Right? I had that discussion outside with the client before I came in. He's like, Wilbur, do you think we can get more? I said, look, I can't. I highly, highly do not recommend you to get more. I don't think you can afford that additional payment. So imagine a business owner going from never having to borrow money, and now you have a loan. But now you want me to get you more money, you're going to have separate loans, right? Because I maxed you out on one loan already. So now you're going to have 3 different payments. You're going from 0 to 3. That's where like the education piece comes in. I always go back to that, and I will always go back to that, because we're very heavy in educating our clients and saving them, right? How do I see it from the outside view, right? That's where I'm able to help that client, right? Save them from themselves sometimes.
Yeah.
Wilbur, so, well, I think you know why I keep him around, right?
Yeah, no, yeah.
But no, thank you so much. I mean, all this information is great, and yeah, I think this topic is really dear to me, because we've been through a bank, and we know how many declines. You put your heart and soul in putting this deal together to getting declined, and then not being able to help them directly. So then now you have to send it. Now we're on the other side. And so I think that's why we're really excited about it. The way I think you could tell our passion, right, when we're talking about it. But no, I want to thank you for coming in and making the time. But then I just wanted one thing that you can maybe just tell our audience, one tip on like something that they must do to be able to be successfully be able to get a loan with banks or with us, whatever it is.
I think it's really, if you have a CPA and accountant, share with them what your plans are, what you're trying to do, right? Start ahead, right? Don't wait till the last minute and then tell your CPA, hey, I'm going to get a loan, right? I'm very, very heavy on that. I would say make sure you plan ahead, right? If you know you're going to borrow in 2 years or 3 years, or you know that maybe you're getting a new contract, right? And you know about this already. Are you preparing yourself for that, right? Speak to your CPA, communicate with them what is it that you're trying to do, because it goes a very, very long way, right?
Thank you.
No, thank you. Yeah, that's a lot of information. I love it.
Yeah. So thank you so much, Wilbur, again, for joining us today. Again, SoCal Loans. If you need anything as far as lending needs, here we are. We'll put the info in.
I like the fact she's saying, here we are.
Yes. No, well, I'm really excited about our partnership, because, now I can actually help the client with more things than we were able to before.
Yeah,
so.
and I realized that, we don't promote your business enough here, even on the show. So
You have LA Latino Chamber on, but you don't have my logo. What's
I know.
going on with that?
I know. No, we got to start. You got to give me your logo.
Why do you guys not love me?
Well, that's funny.
But all right. Well, no, thank you so much. Really appreciate
Thank you
your
guys for
time.
having me. I mean, I look at your guys' I've been looking at a lot of the clips that you guys post, and I on YouTube too, right?
Yeah.
I seen you guys come up on my feed now. I wish I can look at more podcasts, but normally when I'm looking at a podcast, it's something that has to do with numbers. So. Or once in a while, I'll put a comedy just to get my mind off.
Yeah.
Yeah.
But no, thank you. Appreciate it. Don't forget, we're every Wednesday.
your business resource at 7 a.m. every Wednesday. Make sure to tune in and see you next week.
Bye.
Bye.